Well, thank you, and good morning from another one from the dark side, you could say. I'm very honored to be here, and I will try to give you some insights and some background information about cryptocurrencies and regulation. Thank you for the introduction. I work in the regulatory lab, which is the designated entity of the Financial Market Authority that tries to deal with all the incoming FinTech requests, and especially, of course, for the last year, all the ICO and cryptocurrency stuff that we encounter. As a starting point, I would use two, I call them misconceptions. They're more kind of statements we are frequently encountered with, and we are also here in the media. That is that cryptocurrencies and especially ICOs are unregulated, or they're in a legal gray area, and no one actually knows what to do and which laws are to apply. And second, that regulatory bodies, we just heard it as well, need to become active, need to provide guidelines to ICOs and to the challenges of crypto finance. And what I would like to do is give you some background information so you are able to maybe more critically and better understand such statements that are often used by the media. Let's take a few steps back and kind of in a more academic way ask ourselves, what's the purpose of regulation? First of all, there is the systemic stability that financial market regulation tries to uphold, meaning that we are not only looking at single institutions or individual institutions, but we look at the system as a whole and try to mitigate and assess risk coming from the interconnection of the global financial section. Then, of course, and very important, especially for investors, is the client and investor protection, which kind of tries to reduce the information asymmetry between the ones providing the products and the financial engineering and of course the services and the client or the investor. And of course, we want to prevent abusive behavior in the market, meaning prevent insider trading or false information, and we want to ensure a proper functioning and efficient functioning of the market, of the financial markets. So how are we going to do that? Still, again, this is kind of in an ideal world, it would look like this. So, of course, a risk-based approach is favorable. Meaning that a business model with a certain kind of risk needs maybe another treatment than a business model with a lower risk, which leads to the second point. But it shouldn't be discriminatory, meaning that all business models with the same risk should be treated equally. And this is the most important point: the tech neutrality. So we don't want to regulate technologies, but we want to regulate, and this leads to the next slide, we want to regulate, if it would work, functions and services that are being provided by the financial intermediaries, meaning services and products that are created. So for instance, if you're taking in deposits, you might be considered to be a bank. If you're providing investment services, if you are issuing financial instrument, you might be an investment firm. If you are running an exchange, you might be a trading facility, and you need corresponding licenses and approvals by the financial market authorities. Which leads to the questions: where do cryptocurrencies or where does crypto finance fit in? And as we already heard, thank you very much for that, is that there is no clear guidance, or no one actually has a clue what it is from a legal or from a regulatory point of view. It could be treated as foreign currency. It could be treated as a security. Is it a commodity? What makes sense? What doesn't make sense? From a regulatory point of view, the key question always is whether it's a financial instrument / security. I use those terms interchangeably, at least in the in the law I'm practicing, this basically is the same. And as we already heard, there is no uniform approach. For instance, Germany treats it differently than Switzerland, and Switzerland has other laws than Liechtenstein or the UK or the US. But what is kind of clear is that there's a direction in categorizing tokens. Also, the term tokens I try to use interchangeably with coin or token. From a regulatory point of view, it doesn't make a difference. And these three categories are used from a legal point of view to kind of distinguish between the functions the tokens provide. So first there is the transaction token, sometimes called payment token. You can call it whatever you want. You can also call it a utility token or some kind of a utility token, a special kind of a utility token. But what are the characteristics of that kind of token are that you don't have a direct counterparty. You have, if you will, the network as a counterparty, but you don't have someone you have a legal claim against, basically. And it's mostly used for just transferring or storing value, but we also had some discussion about that. And the origin use of it would be as a means of payment. Then there are the utility tokens, which are legally, I think, more interesting because they grant you some kind of right, which then might be a normal contract. There could be some participation rights in the community that can grant you access rights in this community. It could be a software license, so you are allowed to use the services or the software of the platform, or you have the access right to that platform. And the last, and from a regulatory point of view, most interesting or most challenging actually is the security token. The security token normally try to grant some kind of dividend rights and some kind of financial claims. They are structured as an equity or debt instrument. They grant some ownership rights or participation rights in the legal entity behind the token issuing. And basically, and what's most important is that they actually grant a legal claim against the issuer. And again, thinking back that regulation tries to be tech neutral, meaning that the technology, the blockchain technology behind the token is not really relevant. The function they provide is the key, is the crucial question. So this now leads to the question, what kind of regulatory laws might be applicable? There is, and this is one of the most emphasized points at the moment, or most discussed points also in the legal, in the international regulatory world, is the KYC AML stuff, meaning you have to identify your customers, you have to know where the money comes from, especially if you're doing an ICO. At this moment, to my knowledge, there is no direct duty that you conduct KYC, but when you're conducting an ICO. But then if you want to put that money in a bank and pay your deliveries and your suppliers, you have the problem that the bank might say, we can't take that money because you can't say where the money come from. The second point is the prospectus requirements, meaning when you're issuing a financial instrument, because a security token in the end is a financial instrument from a regulatory point of view, meaning that you have to comply with the prospectus requirements. So you have to provide standardized information to your investors and to your clients. Then there are questions whether, depending on how the token and the function of the token is structured, is it a fund? Is it a collective investment scheme? So you might want to consider if you have to comply with this kind of regulation as well. So if you're, from a regulatory point of view, are a fund or not. That could be the case when you're issuing tokens, and you say everyone who's investing in these tokens will get pooled, and we then invest in other projects with that money. And this is an important point, the trading facility, because when you're issuing securities or financial instruments, the secondary trading, when trying to list your financial instrument / your token at the trading facility, at the exchange, this exchange needs to be licensed and needs to be able to list securities on, and not only cryptocurrencies, because basically the cryptocurrencies, the exchanges we have right now, to my knowledge, are not regulated and therefore are not allowed to actually list tokens that represent a security. And there are some others, such as banking activities, meaning if you take in deposits, if it's considered, if your token activity is considered that you're taking in money, this might constitute a banking activity, meaning you need a banking license. Or if you provide, and this is also important, if you provide investment services, also meaning if you are maybe advising on investing in securities tokens, that might also be relevant from a regulatory point of view, meaning that you need to have a corresponding license. Or it might also be considered to be a payment service or an e-money service, meaning again that you need to have some kind of license that allows you to conduct those businesses. Now, this is just a very brief and very high level go through what might be applicable, but what is important, and I think there's a message I'm trying to get across, is there are so many aspects, and a proper legal counseling and a proper advisory, meaning that someone who is actually able to give you an opinion from a financial market, financial regulation side, as well as from a civil rights side, and understands the technology is of most importance. So you're not breaching at some point the financial market laws, because the penalties can be pretty high. Well, let's take a look in the future, or kind of take the status quo and look what's ahead of us. We yesterday had a lot of interesting conversations and the panel discussion, where already some kind of those issues have been mentioned. There is a transition phase, in my opinion, going on from a more experimental technology to a more operative technology. There is a consolidation that has to come sooner or later in the whole ICO ecosystem. And I think this is something good, but still it's going to happen. And this then, of course, influences how regulatory entities are treating cryptocurrencies and ICOs. The thing is, normally when everything goes smoothly, everything is fine. And as soon as people are losing money, then the call for regulatory actions come in. And then the allegations go from, why haven't you seen it? Why haven't you done anything? But that's just the way it is. But the danger lies there that the regulator, or especially the people then in the governments and in the parliaments, tend to over-regulate. And this is also from not talking as a regulator, but talking as a crypto enthusiast, this is not good. And we saw it so many times. I think that we should prevent this, also as a crypto community, trying to get some kind of best practice, code of conducts that Luca Müller surely will talk about as well. The Crypto Valley Association that just recently published such a code of conduct that, in my opinion, is the right way to go to generate the trust and the seriousness in the crypto world. What will come is the is the extension of the scope of AML and KYC duties. The fifth anti-money laundering directive now clearly states or has the intention to extend the scope to cryptocurrency exchanges as well to custodian wallet providers. So what are the takeaways, or what are kind of the what we can learn from what I said and apply it to the two statements I showed you earlier. First of all, there are regulatory rules that might be applicable to an ICO. So be sure you make sure that you don't breach any financial regulation. Existing rules will be extended to include certain aspects of cryptocurrencies, meaning that not new rules will come, but we need to apply, if necessary or if it makes sense, some existing rules to cryptocurrencies. And I sincerely think that compliance needs to be a part of a genuine business endeavor, meaning that getting a proper legal counsel is, especially for an investor, of utmost importance, I think. And it also kind of gives you the assurance that this business model actually thought about what they're doing. It doesn't mean that it is regulated, but you actually thought about, could it be regulated? And you assessed it in a proper way with proper people. As I said, regulate functions, not technologies. So I don't think that we are heading in a way where blockchain as such is being regulated, which in my opinion wouldn't make much sense, but rather some kind of functions, meaning how private keys are going to be stored. That could be something new that would totally make sense, in my opinion, to have some kind of guidelines. Regulators and legislative bodies are, of course, still learning, I think, as well as the whole crypto community, how to govern all those platforms, all those networks. So the regulator is per se always slower than what's going on in the market. So he is even more learning than the ecosystem in a whole. And what I have to say, and that's quite important, I think, that regulators and the ones actually making the laws, that's not necessarily the same. So when talking about regulation and someone needs to do something, the regulator will come. Of course, there are some regulatory bodies, international standard-setting regulatory bodies that have a huge influence and that create soft law, and then this is going to be implemented in creating new law, national law. But then again, it's not the regulator, or mostly not the regulator, that writes the law. It's the legislative bodies, meaning the parliaments and the governments and the people that are represented in the governments. So the regulator only enforces the law. But what we can do and what we should do as a regulator is providing guidance and providing information on how to apply the existing law to this new phenomenon of cryptocurrency and crypto finance. And of course, it's always a trade-off between innovation and risk. The regulators are generally risk-averse because it's kind of their business. Still, I think it's important to emphasize on letting innovation happen also as a regulator, and looking for constructive solutions to the new challenges arising from the crypto world. Generally, I think, to go back to the title of my presentation, is it a contradiction? I don't think so. I actually think that a good regulation will serve the crypto world very well and is crucial for a healthy development of the ecosystem. With this, I would like to end, and I kindly invite you, should you have any questions, write me an email personally or to our FinTech email inbox, or I'm looking forward to meeting some of you and having interesting talks in the break. Thank you very much.